Good afternoon, everybody. Welcome to Abu Dhabi. Hopefully, I'm going to show you something that you've seen on Abu Dhabi before. Sorry. These slides? Sorry. So Abu Dhabi is 4.5 years old. It's a diversified holding company. We're an investor across 8 different sectors. We believe we're one of the drivers of the new economy here in Abu Dhabi. As you can see from the screen, we're in 8 sectors. We have over 250 companies in our portfolio. There's over 175,000 people contribute to us getting our results. And while we're headquartered in Abu Dhabi, we've grown to have a presence in over 45 countries. We also have over six companies that are listed on ADX. And what is this translated into? A company in the first 9 months of this year delivered 54.9 billion of revenue, 10.4 billion of net profit. Our asset base is now grown to over 200 billion, and our equity is now over 100 billion. We have a history of exceptional growth. If you look at 2020 and where the company was in terms of its profitability, we then IPO'd in 2021, and we've grown well over 100% CAGR growth. We've done the same on our net profits as well. So we believe we've shown you the scale, we've proven our capability, and we've delivered. And what's driving this? If you look at the Abu Dhabi GDP growth and the non-oil economy, you have all these different sectors outside the oil sector. They're growing, some of them at double digit. And as Abu Dhabi, we have a presence in all of these sectors. Agriculture with Mawarid, and construction with Trojan, on financial services with Wayo, with Aldar. On the real estate, we had a fantastic announcement yesterday about their development here. So we are one of these drivers. What we're giving you access is to a multi-engine growth diversification. We started giving guidance to the market this year. We believe it's important as being a listed company. So what have we delivered in the first 9 months of the year? 12.8 billion versus a target of 17 to 17.5 billion. CAGR growth target of double digit, despite those exceptional numbers that we've delivered. You can see that the margins are increasing as well. So this shows you the capability of driving out synergy across our business. Capital deployment is up. This slide is at the first 9 months of the year. And actually, we just completed another transaction where we increased our stake in NMDC. So the 3.8 billion is now increased to 5.4 billion. And what more importantly, we've got line of sight on the capital allocation that we want to deliver. 25 to 30 billion over the next 5 years. We've actually refreshing a business plan. We think this number is going to increase, and we can also front load this as well. What's very important for everybody to be aware of, this growth has been delivered with no leverage. If you look at our leverage position today versus a target of 3 times EBITDA, this is 0.6. So basically, we haven't used leverage at all. So we're giving you line of sight that we can continue to grow. What does the growth look like for Abu Dhabi? Priority capital allocation, financial services, hospitality, energy sector. We believe that these are new sectors that are going to be a lot of growth in this region. We want to diversify our funding sources as well. As I said, we've got really low leverage. The local banks have been very supportive of us, and we want to diversify that. In the future, we'll come to the debt capital markets as well. And as I demonstrated earlier, we've got a lot of headroom to go. So we want to expand geographically. We want to continue the contribution of non-UAE companies. Today, it's 13%. We want to see that grow. And we want to take these national champions that are here in Abu Dhabi and grow them internationally. Investment commitments, we've already got line of sight, about 5 billion that we've already got. And capital recycling. We sold a large asset in Modon, 5.3 billion we raised. We've done 2 companies to IPO, Pure Health and NMDC Energy. And we believe that the next focus is driving out the synergy across our portfolio. Thank you very much, everybody.
Good afternoon, ladies and gentlemen. It's great to be at the Abu Dhabi Finance Week, and I'm going to give you a bit of an insight into what is actually Abu Dhabi's global bank, FAB. FAB is basically a bank that connects capital with opportunity, and we really are in the middle of Abu Dhabi's dynamic economy. Looking at what we actually offer as the UAE's global bank, we're situated in one of the strongest sovereign geographies in the world, and actually in the midst of one of the fastest growing economic corridors. We have over $376 billion of balance sheet. And if you look at that on a global basis, we're basically within the top 100 banks in terms of assets. And we are within the world's top 60 banks when it comes to market cap. We're a financial powerhouse that actually covers a network of 20 countries. And we have a diversified franchise with multiple growth engines. We're also, in terms of our risk-return profile, in the unique position where, in a way, we offer emerging market returns for developed markets risk. And we've consistently given a ROTE over a number of years of greater than 16%. We're also a company that is firmly entrenched in the UAE and Abu Dhabi's growth story, and we are very supportive in all areas of capital markets in terms of technology, also sustainability, as well as international growth. In terms of international growth, as I've said, we are in 20 countries. We do cover, out of those 20 countries, about 32% of our group's assets and about 17% of the group's revenue. What's also interesting is we're the only bank in the UAE that actually has a presence in the Americas and an access to the Fed window. When it comes to our strategy, what we have done at the beginning of this year is actually reorganize ourselves around 3 different business divisions. So very much focused in terms of sectors in our investment banking and global markets. We also put all of our corporate activity into what we call our wholesale division, and then all of our individual and entrepreneur business and enterprise we've put into a division which is centered around consumer, it is centered around wealth, SME, as well as our privileged client group, which focuses on our ultra high net worth individuals. We've also, when it comes to international growth, seen double-digit growth, both on the asset and the liability side, but you'll also see that we are opening up our footprint and we are expanding more into Europe. We'll also be expanding into Turkey, as well as Nigeria, and we're opening up another presence in India in Gift City. We're very focused on technology, and we'll be rolling out our AI platform, really, and this is to give client experience, to increase productivity, actually to have cost efficiency, as well as being very focused on sustainability, where we've made a commitment to reach a deployment of transitional finance by 2030 of 136 billion, and in fact, we've achieved 89 billion of that already. Now, as I said, in terms of our diversity of business, we have our 3 divisions. What you can see is all those divisions are actually contributing double-digit growth. We're also very focused on diversifying internationally. Internationally, we've moved the contribution up from about 12% to 17%. And another area of diversification is really in the non-funds income, and this is driving our returns. Here we've gone up from about 33% contribution of top line to 46%. We are well ahead of targets this year, especially on the return target. We are exceeding 20%, but all the other targets are also well on track. And here as well, we give you a little bit of an insight into what we think will happen next year in terms of stronger GDP growth, which will continue to support our momentum. This chart gives you some insight into our resilient returns over time. And I think that here as well, it's important to see that both in good times and bad times, we're able to offer those returns to our investors. I mentioned earlier that we give a developed markets risk for emerging market returns, and that you can see on this chart where we've got a AA- rating, but we far outperform pretty much the global peer group in terms of returns. So just to sum up, what I would say in terms of our bank FAB, what you're getting is a global bank. It's got a fortress balance sheet. It's got superior credit ratings, very robust returns, and it's got a structural growth backdrop, and it's in one of the world's most dynamic economies. So with that, thank you very much.
Hi, Assalamu alaikum everyone, and good afternoon. Ehsan Akhtar from Abu Dhabi Islamic Bank. and I'm here to present you the Adib story. So Adib was the first Islamic bank which was established in the Emirate of Abu Dhabi back in 1997. We are now listed we are now number 5 in terms of total assets of 270 odd billion, with a market capitalization of about 70 billion. We are the sorry. We are one of the fastest growing retail bank. So today we have a market share of 15% in the UAE, diversified franchise, and retail now contributes almost 50% of our total revenues. So in terms of our overall assets, you can see, we have a unique market position. So we have about 2 million customers in the UAE, out of which 750,000 customers are UAE nationals. So these are very loyal customers in the UAE. And as a result of this, we have one of the lowest cost of funds, funding cost advantage in the UAE with about 1.7%. Our unique advantage is in terms of our returns, which are at 30% return on equity, much higher than the global average, as well as the regional averages as well. In terms of, so we have a track record of consistently delivering financial results that are superior to the market with a return on equity of 30%. This, if we pencil this down, then this translates into a net profit margin of 4.2%. And we have a high proportion of non-funded income, which is almost 40%. Our CASA ratio is our key differentiating factor, whereas in our retail business, this is almost 90% of our total deposits. So all this translates into value creation for our shareholders, where our overall dividend yield has been 6%, and our TSR ratio of 44%. We are rated very highly by all the rating agencies. So MSCI index is AA, Fitch and Moody's A+, and A2. If you look at our stock performance, we have registered an year-to-date growth of 58%, and it's a diversified shareholding base. So our foreign ownership is now 22% against an ownership limit of 40. There is meaningful upside if you look at our overall consensus from the market. Share price today is well below the consensus, so there is upside in terms of our valuation, and this presents an opportunity for the shareholders. We've had a history of consistent dividend distribution, so we have paid 50% of net income historically, and last year was particularly high, where we paid approximately 83 fils as a percentage of share capital. Our overall balance sheet has grown by almost 45%, fueled by growth in our financing and our deposits. All the 4 measures that you see on the slide have registered a double-digit CAGR growth rate over the last 5 years. In terms of profitability, our net income has grown almost quadrupled in the last 5 years, from 1.6 billion in 2020 to 6 billion last year, primarily result of the double-digit 20% increase in revenues over the last 5 years. In terms of our portfolio quality, NPLs are at a record low of 3%, while at the same time, cost of risk has been relatively stable at around 40 to 60 basis points, and our net profit margins have been resilient, with cost to income ratio declining to reach 28%, as revenue growth has outpaced expense growth. So in a nutshell, if you look at the Adib story, we can sum it into 4 parts. We are a diversified franchise. We have a track record of delivering high return on equities, and we have a sustainable finance future. Thank you.
Good afternoon, everyone. As you've probably heard, most great things in life have a really good story behind them. the story of InvestCorp Capital actually starts, believe it or not, more than 4 decades back in 1982, when our founding fathers of InvestCorp got together and they said, wouldn't it be nice if we could create an institution here in the Gulf, serving Gulf-based investors, private families, and high net worth individuals, and provide them access to otherwise inaccessible private investment opportunities all over the world. Initially, we thought we'll focus on the developed markets. This is 1982, so understandably so. United States and Western Europe. But from there, over the last 4 decades, InvestCorp grew and expanded and delivered on its mission to become the preeminent manager and provider of alternative investment opportunities to private clients here in the Gulf, spread out all over the globe across multiple asset classes, including private equity, real estate, credit, infrastructure, strategic capital, etc. So that's the story, the backdrop, if you will. About 3 years ago, we said, we've delivered on the original mission of our founding fathers. Isn't it appropriate now for us to go the next step, the next natural, logical step, and deliver that same opportunity, access to private market investments all over the world to retail investors through a public market setting? And that's exactly what we did 2 years ago when we IPO'd InvestCorp Capital, which was founded by InvestCorp with that very simple mission. In, of course, understandably, Abu Dhabi, listed on the ADX, the capital of capital, as it is fondly referenced, the natural location for it. We are celebrating our 2-year anniversary about a couple of weeks back, along with the 25th anniversary of ADX, so very, very timely in that sense. And we have delivered on the mission. We've distributed over $220 million in dividends, and we've grown our NAV over this period of time. And the whole idea is to give a unique, very focused, targeted investment product to public market investors that is diversified, targets ongoing yield, and long-term capital appreciation through investments in those private market asset classes. So we have the benefit of being led by a stellar team, of course, led by our chairman, Mr. Mohammed Al-Ardi, our chief executive officer, Sana, and others that you see on the screen, with over 150 years of combined experience behind them, backed by a stellar board comprising some real stalwarts of the industry, including Dr. Nawal from Abu Dhabi, the permanent representative to IRENA, Peter McKellar, who's also on several other boards of financial institutions, Mohammed Shrugi, and Pam Jackson, and supported by the entire cast of about 480 people at InvestCorp that help us originate, manage, and monetize these investment opportunities. So not surprisingly, you can see the spread of our investment base. It's about $1.6 billion of long-term investments all over the globe, diversified by region, but more importantly, diversified by asset class, as well as source of income, a combination of yield, as well as long-term capital appreciation. And that is backed up by 100-odd professionals doing private equity investments, finding the right opportunities, investing in them, monetizing them. They've done over $25 billion in deals over the last 4 decades. Same thing on the credit side. We manage about $22 billion in total credit assets today. Same thing on the real asset side, where we have $25 billion, 28 actually, if you include infrastructure, of assets in the ground that we have invested across and delivered strong returns on. So it's an easy story. Hopefully you can relate to it, and it's my privilege to be able to present to you here today. Thank you.